Welcome back to Candlelight, where price is a mechanical function. In this video, I'm going to be going over just how simple it is, not easy, but simple it is to catch moves that can give you 61% in 48 hours. Now, I'm making another two-part video because I realize moves like 60% in 48 hours might sound a little optimistic, which is why on the second part, I want to show you just how regularly, if you wait for the right zones, you can catch large, powerful moves. Now, this two-parter ties in really nicely with the last two-part videos I put out on waiting for good moves. A lot of people just jump in and you don't catch a full leg or a full swing or a full move. And on top of that, if you wait for good zones, those are the areas where the most imbalance of supply and demand exists that will give you strong ballistic moves your way, which one will increase your profit potential, and second, you'll definitely know that you're on the right side of the trade. It also ties in really nicely with the multiple time frame analysis video. I know it sounds like a lot of long and fancy words, but all it means is finding a good zone, supply and demand zone for going long or going short, on a larger time frame chart like a daily, and within that zone you go to a smaller time frame chart like a 4-hour or a 60-minute or a 5-minute, and as you go to smaller time frames, you make your zone even smaller. Now, because every trade you take, every trade you make, you want a position size, which means you risk 1% of your portfolio, never more. And if it goes against you, if it breaks your zone, you cash out. You trade like a chicken. You do not do any kind of risky trading. So if your zone is really small, let's just say if you're trading stocks, your demand zone is 5 cents, and you catch $20, a $20 year move to the upside. It might not happen in 48 hours, but if you catch a $20 move, that's 400% on a trade where you've risked 1%. That's pretty good. So I'm going to go over a first example on this video, and I'm going to show you just how frequently you can catch large moves. Particularly if you're trading stocks, you have hundreds of thousands of, not hundreds of thousands, hundreds or thousands of stocks you can be looking at and just wait for price to come into a good zone. You can be getting some pretty good opportunities on a regular basis that will give you large swings. And if you know how to make your zone small enough, a 5 or 10 cent zone that catches $10 or $20, that's pretty good. So let's jump right into it. All right, this is another example of the GameStop stock, simply because it's such a fantastic case study. My left-hand chart is a daily chart where every candlestick represents 1 day. My middle chart is a 240-minute chart, so that's 4 hours. Every candle represents that amount of time. And the right-hand chart is a 60-minute chart, so every candle represents 1 hour. So this is what I mean by multiple time frame analysis. This base rally that gave you ballistic movement out, you do not want to catch this leg. You don't want to go long this leg. This is what I mean by you want to wait for price to, 1, rally, and then wait for price to, 2, come back down into the origin of that rally, which started here. There's equilibrium of supply and demand, and then there's not. And then there's more demand because price went up. So when price re-enters that zone, it's in a downtrend. And this is when you want to, in an area of demand, start getting uptrends and, quote unquote, signals or indications that price is now starting to reverse. Now I'm going to be very optimistic on our profit here. 61% is buying, and I'm on the right-hand side of the chart, is buying low and only cashing out at the end of the first day. So 61% from here to here is just 2 days of this small candle and this one rally. It's not even catching the full leg. Just the first 2 days will give you 61.46% if you do it right. And this is just a fantastic, simple explanation, or like I said, case study on how not easy but simple it is to catch these zones. So within this daily zone, you now want to look for price to start rallying within demand, and that's where price should be doing that. So this is your daily demand zone in your green, and then you want to look for, but this is a pretty large zone. I mean, it's not small. You want to make that smaller. So within your daily demand zone, all right, sorry about that, guys. I moved the box by accident. Within your daily demand zone, you want to look for 240-minute demand zones. So on top of price being in demand, you want price to give you demand zones like this one, and if it's in a downtrend, which it should be because it's coming back down into demand, you want demand zones to break downtrends. So once price breaks above your downtrending trend line, the origin of the leg or the move that broke that trend line is where you want to be looking for demand zones, and it's right here. This is a drop base rally. It also happened to give you a gap. Gap trades are very powerful. I'll be making a video on that one soon. So all you have to do is wait for price to re-enter that area, and then you get nice ballistic movement out. And again, this move looks huge, but in relation to the whole leg, we're just catching the first 2 days, just this right here. But if you wait for good enough zones, you will get really good moves out of them. So even this 240-minute zone, still pretty big. Let's see if we can make it even smaller and risk, or not risk, because every trade you make, you're going to risk only 1% of your portfolio. Again, risk averse. But let's see if we can maximize profit potential by making our zone as small as possible. So every percentage upwards, or our direction, is a percent in our pockets. So within this 240-minute zone, which is right here in the solid lines, that's the 240 zone that we have right here. Within this 240 zone, this is the last rally, and then right here, this is the last candle before you have a gap. That's the candle in control that you want to be taking, and at the low of this candle and the high of this candle, you have the high of this candle is $40.68, and the low plus one tick below, which is where your stop loss is going to be, one tick below that zone. If price continues to fall below that area, then you want to cash out for a loss, but it's a small loss, just 1% of your portfolio. The low is $39.85, which is an 83-cent zone. Now, we didn't even go down to a 15-minute or 5-minute zone. We just stayed to a 60, just to keep things simple. You know, for anyone who are a beginner, or for anyone who's a beginner who wants to understand how price movement works and stuff like that, we'll just keep it simple. But that's how you make the zone even smaller. So from your daily zone, which was this size, we then made it smaller by catching the origin of this rally right here, which was your 240-minute zone. And within your 240-minute zone, we went down to a 60, which is the last candle before the gap. That's a gap trade. Then you just, and it also happens to be the demand zone and the origin of the rally that broke your downtrending trend line. And all that happened in your daily demand zone. So when price re-enters that area, that's where demand is, that's where you buy. And just to be very conservative, we let price go just till the end of the day, where we, let's just say, cash out at $91.70. We caught $51.02 divided by our 83-cent zone. That's pretty much a 60 to 1, 61.46%. If you wait for strong enough moves, it took about 30 days, 15 to 15, yes. Right, January 15th to February 15th. So you wait for price to rally away, giving you a good demand zone, and you wait for price to come back down. Then you, within that, or the origin of that move, you get your zone, you make that zone even smaller, you risk 1% of your portfolio, and a 2-day move gives you 61%, and that was a 2.5-week swing to the upside. So we're being very conservative here. And this is just one stock out of many. If you take the time to not do anything and wait and do some simple time frame analysis, you can really pick some strong zones where you're going to get fantastic moves your way. So anyway, guys, hope this helped. The next video I'm going to show you just how within the past 30 days from the recording of this video, it'll be a bit later by the time it comes out, but within 4 weeks, how we had two spectacular and huge moves that will make 61% look kind of meek on the Canadian dollar, I believe. And I'll show you those in the next video. All right, take it easy, guys.